There are thousands of U.S.-listed stocks available to investors, so building a diversified portfolio can seem daunting. But what if there was a way to gain broad market exposure without spending hundreds of hours researching individual stocks? That's where Fidelity comes in, one of the most iconic names on Wall Street, and Fidelity index funds are among the most respected investment options on the planet. In this video, I'll show you and John 3 top-performing Fidelity index funds. I'll show you the future projections for each fund with a $100,000 investment. Spoiler alert, every fund shown has the potential to exceed the $5 million mark over the long run. In the end, I'll show you and John a fund that has the potential to reach an $8 million valuation and pay over $70,000 in monthly dividends. Now, when I decided to share my top Fidelity index funds, I wanted to ensure they cover the most popular market segments without much overlap. Why? So you can mix and match them to get the exact exposure you want in your portfolio. Each of these funds offer unique strengths, targeting different aspects of the market, allowing for a well-rounded and diversified investment strategy. But if you don't want to mix and match your investments, I have a solid index fund option for you, a multi-asset fund that acts as a one-stop shop. If you prefer a hands-off approach, this one's for you, something we'll discuss in the coming chapters. Here are the 3 best Fidelity index funds ranked from best to top-of-the-line return on a $100,000 investment. Starting at number 3, we have Fidelity U.S. Sustainability Index Fund, known by the ticker symbol FITLX. This index fund is designed to invest in companies that exhibit strong environmental, social, and governance, in short, ESG practices. The investment strategy focuses on companies with high ESG ratings, ensuring that your investment not only grows but also contributes to a more sustainable future. The fund is well diversified across various sectors, with a significant portion allocated to technology, healthcare, and financial services. Top holdings include tech giants like NVIDIA and Microsoft, healthcare leaders such as Johnson & Johnson, and financial stalwarts like JP Morgan Chase. This diversified approach ensures that the fund remains resilient against market fluctuations, providing a stable and sustainable investment option. And to top it off, it has an expense ratio of just 0.11%, which is an affordable option for investors. The index fund has shown strong historical performance, with a current dividend yield of 0.97%, a dividend growth rate of 10.36%, and an average share price appreciation of 13.85%. Investors benefit from both income and capital appreciation. Looking ahead, let's consider the potential future projections for a $100,000 investment from John in this index fund. After 1 year, John's investment could grow to approximately $114,820. After 10 years, it could reach around $393,472. 20 years down the line, you might see a value of about $1,514,987. And after 30 years, the investment could reach a valuation of $5,744,982. In terms of dividends, after 30 years, John can earn about $17,418 annually, translating to approximately $1,452 per month. The total value added over 30 years is $5,644,982, which includes the majority of total capital appreciation of $5,468,638 and total dividend reinvestment of $176,344. The sustainability focus of FITLX is a significant benefit for socially conscious investors. Additionally, companies with high ESG ratings often have better management and lower risk profiles, potentially leading to more stable, long-term returns. So, this fund has a promising future projection, however, it lacks dividends, which are essential for retirement. Dividends are your steady cash flow. Can the next index fund offer a better payout? Let's find out. Next, at number 2, we have an even better and more promising index fund. The Fidelity NASDAQ Composite Index Fund, known by the ticker symbol FNCMX. This index fund is designed to give investors broad exposure to the NASDAQ Composite Index, which includes some of the most innovative and fastest-growing companies, particularly in the tech sector. The fund's objective is to mirror the performance of the NASDAQ Composite Index, providing investors with an opportunity to benefit from the high growth potential of technology and other leading industries. As for the holdings, its major holdings include tech behemoths like Apple, Microsoft, Amazon, Tesla, and Alphabet. These companies are known for their innovation, market leadership, and strong financial performance, which contribute to the fund's overall growth potential. The fund is also a cost-effective choice for investors with an expense ratio of just 0.29%. Historically, this index fund has shown impressive performance, reflecting the strong growth trends within the tech sector. With a current dividend yield of 0.56% and a robust dividend growth rate of 14.76%, along with an average share price appreciation of 14.55%, investors can expect both income and capital appreciation, which makes it an attractive option for those looking to capitalize on the tech index fund. Looking at future projections, if John invests $100,000 in FNCMX, his investment could grow to approximately $115,110 after 1 year. After 10 years, it could reach around $408,631. 20 years down the line, the value might rise to about $1,671,532. And after 30 years, the investment could grow to $6,844,785. In terms of dividends, after 30 years, John could earn about $35,377 annually, which translates to approximately $2,948 per month. The total value added over 30 years could be around $6,744,785, with a total capital appreciation of $6,483,003 and a total dividend reinvestment of $261,783. These returns are good, but there's an even better option, an index fund that has the potential to pay over $70,000 in monthly dividends while maintaining a high portfolio valuation. Stick around until the end to find out. FNCMX's focus on the tech sector is a major advantage, given the rapid advancements and high growth rates in this industry. Investing in the NASDAQ Composite Index Fund allows you to participate in the success of leading tech companies, which are at the forefront of innovation and are likely to continue driving market growth. The growth potential within the tech industry is immense, offering investors the chance to achieve substantial returns over the long term. But can our number one pick beat it? There's only one way to find out. At number one, we have Fidelity Multi-Asset Index Fund, known by the ticker symbol FFNOX. This index fund offers a diversified investment approach by allocating assets across different classes, including stocks, bonds, and short-term investments. The fund's objective is to provide a balanced exposure to a variety of asset classes, aiming for growth and income, all while managing risk. This diversified strategy makes FFNOX a suitable choice for investors seeking a balanced portfolio with reduced volatility. The Fidelity Multi-Asset Index Fund is well diversified across several sectors and asset classes. Its major holdings include a mix of U.S. and international stocks, bonds, and short-term investments. This broad diversification ensures that the fund can weather market volatility better than funds focused on a single sector or asset class. This provides a more stable investment experience, and to top it off, it has an expense ratio of only 0.08%. Historically, the index has shown solid performance, benefiting from its diversified approach. It has a current dividend yield of 3.05%, a strong dividend growth rate of 14.28%, and an average share price appreciation of 9.23%. So, looking ahead, if John invests $100,000 in this index fund, his investment could grow to approximately $112,280 in the first year. After 10 years, it could reach around $341,684. 20 years down the line, the value might rise to about $1,446,085. And after 30 years, the investment could grow to $8,602,933. In terms of dividends, after 30 years, John could earn about $897,882 annually, translating to approximately $74,823 per month. That is a huge payday for a retired fella. The total value added over 30 years could be around $8,502,933, with a total capital appreciation of $4,072,535 and total dividend reinvestment of $4,430,398. Want to achieve a comfortable monthly retirement income but don't have $100,000 to invest right now? Click the video on the screen to explore investment options that can get you there with just $10,000.